What's up, fam? It's your boy Kamapoko, the rookie FX trader who's still trying to figure out if charts are just fancy squiggly lines or actual moneymakers. Today, we're diving deep into the US dollar to Japanese yen pair. Stick around till the end because I'll also be dropping some crucial, don't mess up like I did, tips. How were your trades last week? Or even last month, if you're feeling brave enough to look back? July was pretty chill for me on the trade count. But guess what? Your boy ended up in the green. I'm trying not to get a big head about it though. Gotta stay disciplined, you know? Like, follow the rules, or the market gods will smite you. Oh, and if any of you absolute legends traded during the non-farm payrolls announcement last week, hit me up in the comments. You're either a genius or completely insane, and I need to know which one. Alright, let's stop procrastinating and get into today's US dollar to Japanese yen market analysis. Since it's the start of the week, we're obviously gonna kick things off with the weekly chart. Speaking of analysis, I'm planning to share as much as I can on the YouTube community tab, so make sure you smash that subscribe button. Also, I post super detailed and super serious, unlike this video, daily market analysis on my blog, so if you're into that, definitely check it out. Links in the description. Alright, feast your eyes on this bad boy. The weekly chart. Looking at it, we can clearly see the downtrend is still in full swing. This right here is our recent low, and that's the last swing high. Last week, I was rambling about how we were nearing that swing high price zone, and it was gonna be a make or break moment. Either we blast through it or get smacked back down. Well, spoiler alert, we got smacked back down. Probably all thanks to the US non-farm payrolls data at the end of last week. On the weekly chart, we're still bearish until we clearly break above that swing high. Don't believe me? The chart doesn't lie, even if my brain sometimes does. Next up, let's peek at the daily chart. Here it is. On the daily, this is our recent high, and that's the last high or low. We saw a monster drop of about 350 pips in one day. But on the daily chart, we're still bullish until we clearly break below this price zone. So, what's it gonna do? Go up again? Crash down? What do you think? My crystal ball is currently in the shop for repairs, so I need your input. Moving on to the 4-hour chart. Check it out. We had a nice uptrend cooking on the 4-hour, but then BAM. That massive drop just annihilated it. I'm tentatively calling this the first wave of a downtrend, but honestly, with all this fundamental news messing things up, it's a real headache for a technical analysis purist like me. Can I even trust this swing? I mean, I want to. I do, God, I really do. Last but not least, the 1-hour chart. The 1-hour chart is basically a mini-me of the 4-hour chart. Uptrend busted. Now we're looking bearish. The swing high is a bit fuzzy, like my brain before coffee, but I'm gonna be a bear until we clearly break above that sharp drop zone. Alright, based on all that analysis, I'm gonna spill the beans on my trading strategy. If you're a gambling addict, you might want to hit that back button and short right now. For me, my first plan of attack is to look for a pullback short. Assuming last week's drop was the first wave of a downtrend, I'm aiming for the third wave on the 4-hour chart. I'm keeping a close eye on this area right here as a potential entry point. This spot was the last high or low in the recent uptrend, and if we retrace back there, the 4-hour 21-day moving average might also converge, which gives me warm, fuzzy feelings of high probability. Now, there's also a chance that selling pressure could kick in stronger from this other price zone and send us plummeting, but I'm not planning to enter there. However, if this sideways consolidation drags on forever, I might consider a short entry at that price point. And if I feel like the selling pressure in this initial target area is weaker than a kitten's meow, I might just flip the script and go long. That sharp drop left us without many clear resistance points. If the uptrend on the shorter time frames looks strong, I might just hop on that train and look for a long entry. The price is currently sitting right on the daily 21-day moving average, so there's a good chance buying pressure could swoop in. Ultimately, it's all about watching that price action like a hawk. But for now, I'm really eyeing that pullback short on the 4-hour. That's pretty much it for now. If I come up with any other brilliant strategies or the market decides to pull a fast one on me, I'll be sure to update you on my blog. Just for reference, you know. Don't want you to miss out on my epic trading adventures and misadventures. Alright, that's all for today, folks. On this channel, I'll be sharing market analysis and my trading journey, so if you're into that kind of stuff, and only if you're into it, no pressure. Please hit that subscribe button, drop a like, and leave a comment. Until next time, stay awesome, and happy trading.